am here with Andrew Moss, the CEO of Aviva. Thanks very much for joining us on Bloomberg Television. What's behind your listing today on the big board?
Well, it's really simple, actually. We have more than 20% of our shareholders now based here in the US. And that's been growing steadily over the course of the last 2 or 3 years since we made an acquisition in the US in 2006. And I think just making life easier for them by having an ADR quoted here on the New York Stock Exchange makes absolute sense for us.
Okay, 20% of your shareholders are US. Do you expect that number to increase now that you are listed here on the big board?
Well, as I said, it has been growing. And I think that a lot of that had to do with the acquisition we made in 2006. We bought a company called Ameris. That had a good investor following as a publicly quoted company here in the US. It brought more US investors to Aviva, for sure. We've grown that company very strongly in the course of the last 3 years, so we've seen that investor number continue to grow. I'd like to think it's going to continue to grow.
Okay, who are you going to be taking business away from? We know U.S. insurers such as AIG are dealing with a lot of problems right now. Are you going to be targeting some of their customers? I mean, is that behind your listing here in a sense also?
Well, I think you've got to look at that question both in the US but actually more internationally as well, because we operate in 28 countries around the world. We're the world's 5th largest insurer ranked by premium. We've certainly gained business in some of our markets around the world from AIG, whether it be on the life side in Asia, for example, or on the general insurance, the P&C side in our biggest market in the UK. I think here in the US, probably that hasn't been the case so much because we operate in a very specialised market, in the fixed interest annuity market and the equity indexed annuity market. I think the big question for us in the US now is, strategically it's a hugely important market for us. It's more than 30% of the world's savings. For a company like Aviva, growing its presence in the US market strategically has to make sense. The real issue for us, I think, is do we go on just growing the business that we have through the product set that we have, or do we diversify and look for perhaps some other ways to do that?
So other ways to do it would be acquisitions. You have talked about potentially doing more acquisitions in the last couple of months. What makes sense for you? What kind of business?
Well, I think if you're looking in the US, as I say, the big question is, do we diversify away from the product that we sell at the moment? That's certainly something we're giving some thought to at the moment. I wouldn't want to encourage people to think that we have a checkbook out and we're going to be looking at that very hard in the very short term. But strategically, it is a real question for us. I think there are opportunities, and there are possibly opportunities to do it without, even if you wanted to do something inorganic, without spending a lot of money.
What would be a lot of money or not a lot of money?
Well, I think Aviva historically has looked at what we call bolt-on acquisitions. Certainly that's less than sort of 10% of the company. I think here in the US there are potentially opportunities to grow for a lot less than that could still give you an operating platform and some distribution that might help you achieve your strategic objectives over time. So, that just to be clear, I mean, that's not going to require any capital raising to do that.
Okay. We've seen global stock markets rally in the last 6 months. How much of that improvement in the equity markets was behind your coming here to the U.S.? If we hadn't seen that, would you be here today?
We would be here today because we, as I said, this is really about serving our shareholders in the best way possible. I mean, as you know, if you go through a process to meet all of the requirements of listing on the New York Stock Exchange, it is a program which takes you a number of years. So actually what we had to do was decide, given all the uncertainty in financial markets over the last 18 months, whether we wanted to stay on that path. We absolutely decided we did want to do that because strategically we think it's the right thing for us to do. Yeah, it's great to see equity markets having rebounded in the way that they have in the last 6 months, but that's not why we're here.
Okay, great. Thanks. Good luck with everything. We have to leave it there. Our thanks to Andrew Moss.